In this video, I'm going to show you how to actually send and manage your QuickBooks Online invoices with a 3-step process. And I'm also going to include a quick tip at the end to go over what happens if someone pays you before you have the chance to even invoice them. So like I said, there's a 3-step process that you should always do for every single invoice forever in QuickBooks Online. And that's number 1, send the actual invoice. Number 2, you receive a payment when a customer pays that invoice. And then number 3, you make a deposit in QuickBooks Online. I'm going to break down in depth what that means and what that looks like in this QuickBooks Online dummy file here. So first step, create an invoice. Let's say we perform some work and we need to send an invoice to a customer. In your QuickBooks Online file, in the upper left-hand corner, click plus new, and then click invoice under customers, the first column. This invoice screen might look a little different. It depends what time you're even watching this video. QuickBooks Online loves to change their user interface, but hopefully you see something here like add customer. You just click on that. You could add a new customer on the fly and put in their first name, their last name, their company name, their email address. That's super important. You want to make sure they actually get the invoice. You can include all this extra additional information as well for all your customers. But for now, we're just going to select a existing customer, Joe Bob. And after that, you want to make sure your terms are correct. And by terms, I mean we have net 30, there's net 15, net 60, due on receipt. All this means is how many days until the customer is supposed to pay your invoice. You're telling them, hey, you have this many days until you pay the invoice. So net 30 is 30 days, net 15 is 15 days, net 60 is 60 days, and then due on receipt is, hey, you need to pay this invoice today or whatever day you actually send the invoice to them. We'll keep it at net 30 for now. For this example, we'll do June 1st. After that, you'll scroll down to this product or service section here, and you can, there should be at the very least sales selected, but you can always create a new product or service on the fly, and you can name it whatever you want. Maybe it's a plumbing services, whatever. You can classify it as like it's a service, a non-inventory item, an inventory item if you have the right subscription. Scroll down the sales section. You can type in, any type of description. This is like, general plumbing service repairs, whatever. And then you can do kind of a flat rate for one of these service items. So let's say our minimum for this would be 500. And then for the income account, you want to tie this to, you could point it towards sales, but if you want to actually look at your finances and see where all of your different revenues are actually coming from, and you want to see like, hey, which revenue is bringing in the most money, then you can actually just create your own income account by clicking on that, scroll to the bottom, click add new, and you can do plumbing services for this one. Account type, you can scroll down and hit income. Detail type, honestly, doesn't matter. And that's it. And you can click save, and then you can click save and close. And that's it. Just like that, we have our plumbing services that has our description that we made, and one quantity or one unit is $500, but you can always change this to whatever you want. But it just makes it a little easier. And then you can add multiple items if you want, but I'm not going to dive too deep into that. If you want to know more about this, super in-depth invoice actual stuff, you can ask me in the comments. I can make another video, but for now, we're just going to do landscaping. And we're going to invoice this guy $3,750 for landscaping on June 1st. And we can send it right away, or you can click save and close, and it won't send it to the customer. Cool. So that was step 1. Like I said, 3 steps. We just finished step 1, which is sending an invoice. The second step is receiving a payment. So we know, okay, cool, we sent this invoice. Joe Bob paid this invoice on June 15th. We sent it on June 1st. What do you do when someone pays your invoice? You receive a payment. And receiving a payment, it literally just tells us what invoice was paid by what customer. And so this is how you do that. You click on plus new, click on receive payment, it's right under invoice. And from here, you'll type in what customer actually paid you money. In this case, it's Joe Bob. And after that, you have 2 options. Record payment is probably what you're going to do. You can charge a new payment if you have their payment information on file already, and you can kind of pay the invoice for them, like on their behalf, but we don't have card information or payment information. So we're going to click record payment, select the date he actually paid the invoice, reference number, not too important, payment method. Let's say he paid us with a check. And this part is so important. Everyone screws this up. Please pay attention to this. Deposit to, always select undeposited funds. Normally you want to think like, oh, well, this money is being deposited into my bank account, right? But there's one step before that, and it's undeposited funds. This is, like a lot of business owners, maybe you receive multiple payments throughout the week, and you're so busy, you don't have time every time someone hands you a check, like, hey, we received this money from this invoice, and you're holding this check in your hand. You don't drop what you're doing and drive to the bank. Maybe you do, but I'm sure a lot of people just don't drop what they're doing because you got a lot going on. So what happens is you probably hold that check for that invoice payment and keep it on your desk, or whatever, in this imaginary analogy I'm making right now. But as like a week goes on, maybe some more invoice checks stack up on your desk. Notice how they're not in your bank account yet. They're not deposited yet. They're undeposited funds. So that's what that name means. But all you need to know, just please, if you ever receive a payment, always point it towards undeposited funds. That's like the biggest takeaway from this entire video. You're going to save yourself a huge headache. Cool. So we got all that stuff set up. Now we can actually just select what invoice was paid. There could be a list of invoices here, but for now we just have one. So we're going to check that invoice box. Some customers, maybe they don't pay the full invoice right away. So you can always adjust that in the amount column here. Maybe you paid $2,000 instead. But in this example, we're going to say he paid $3,750. Also, if you want more in-depth like understanding of like whole undeposited funds that I just explained briefly, if you want a whole video on that, let me know in the comments and I can make that happen. But for now, we're going to receive our payment, which is step 2. We sent the invoice. Now we're going to receive this payment. Cool. Now, like I said, again, 3 steps: send an invoice, receive a payment, and make a deposit. Even though this is just like a one-time invoice thing and it's already matched up in our bank feeds, it's always best practice. You want to make a deposit, even if it's just a single check payment for an invoice. So the way to make a deposit is click on plus new, click on bank deposit, and then and here we're going to select what these are all undeposited funds. So which of these invoice payments was actually deposited into your bank account? And so in this example, on June 15th, in our bank account 1234, just whatever bank account you're depositing the money into, then we're going to select the date and then what actual invoice payment is being deposited. So in this case, it's Joe Bob's payment, and we can click save and close. And now we sent the invoice, received the payment, and made a deposit. Now we can see in the bank feeds here, this bank account is saying, hey, these were deposits, transactions sucked into QuickBooks from the actual bank account. And we can see like, okay, cool, like there's a match here. We can see that a deposit on June 15th for $3,750 from Joe Bob is matching in QuickBooks to the actual deposit that came in from the bank account. So that's a super, super good sign. We can see, this is clearly like looking like the correct one. If this is still kind of confusing, this whole bank feed side of stuff, let me know. I can also make another video on that. But for now, we're going to click match. So honestly, if you kind of got the gist of it, send an invoice, receive a payment, and make a deposit. If you got the gist of it, you can stop the video now. But if you keep watching, maybe you'll learn something more. In this example, the next one I'm going to show is how do you do that for if you receive multiple invoices from different customers and deposit them all on one day. What does that whole process look like? So honestly, it's still the same thing. It's the 3-step process. So we already sent 3 invoices. I sent 3 invoices before I recorded this video. Now the second step is we're going to receive the payments. So if I click on receive payment, and here are the 3 different customers I've sent invoices to, customer A, B, and C. I'm going to click on customer A, and let's say they just paid their invoice on the payment date, which I'll say it was June 28th. Payment method, let's say it was cash. Deposit to, undeposited funds, always remember that. And select the invoice, and then I'm going to click on instead of record and close, record and new, because customer B also paid us. Same deal, 28th. Let's say it was cash, deposit to, undeposited funds, perfect. And then one more time for customer C, 28th. Let's say this was credit card. Deposit to undeposited funds, and then select the invoice and record and close. Now notice I did the same exact process as I did for the first invoice. I sent an invoice and received the payment, and we were able to look in the bank feeds, and QuickBooks was like, oh, hey, you received a payment for this dollar amount. And I also see on the same date, the same dollar amount was deposited. And so I was able to match them. So we just did the same process. We sent those 3 invoices, received 3 payments, but there's no match. Notice here on June 28th, there's no match here. For $7,500. We know that much money was deposited into our bank account, but we're not able to match this deposit to all the invoice payments. And so that's why we make the 3rd step, make a deposit. It's so important in the 3-step process. So we sent these 3 invoices, we received 3 payments. Now I'm going to make a deposit on to this bank account or whatever bank account we actually deposit to, the correct date, the 28th. And then here are all of our undeposited funds again. I'm just going to select them all. We see it's for $7,500, all these invoice payments. I'm going to click save and close, and now we'll see, now there's a match. Now QuickBooks knows like, okay, all those invoice payments created this one deposit that hit the bank account. And now we can click match. And just like that, 3-step process, invoice, receive a payment, make a deposit. Life will be so much easier for you if you follow that process. But like I said, bonus tip, what happens if someone actually pays you before you have a chance to invoice them? You wouldn't do work for someone and you're still on the job site and they hand you money for the work because they already knew how much it was going to be. You wouldn't invoice them right there and then or afterwards. It would be awkward. You're already, they paid you already. So what do you do in that situation? You create a sales receipt. And so very similar, you just go on the plus new icon on the upper left-hand corner. You select whatever customer you did the work for. Let's say it was Joe Bob again. You select the date that this money was received. We'll say it was July 3rd. Deposit to is still always important, undeposited funds. Let's say for now it's just landscaping, and it was for $6,600. Cool. Very similar to an invoice, but a sales receipt is just, hey, someone already paid me the money. So from here I can click save and close. And again, we'll see a match here for the sales receipt, but it's still best practice for a sales receipt. It's technically like a two-step process, but we always want to finish it up by making a deposit, just because maybe you receive a bunch of invoice payments and you make a sales receipt as well on the same day, and all that money goes into your bank account. Just like that last example, even though it's a sales receipt and we see a match now, like you always just want to follow it up by making a bank deposit. In this example, it might look like overkill, but it's just going to make your life so much easier. So just like that, I can click match, and there we go. Three deposits in our bank account in QuickBooks Online were able to be matched because we were able to follow that three-step process, which is invoice, receive a payment, and make a deposit. And then obviously the sales receipt stuff. So I'm going to cut the video short right here. I don't want it to be too long, but if you have any questions about any of this stuff or you want to see something more in depth about QuickBooks Online, then let me know and I can make a video about it.